So as we saw at the top of this program, consumer confidence fell more than expected in the month of July, with the unemployment rate at 9.5% and still expected to peak into the double digits this year. How does this impact the consumer's balance sheet? Joining us now is the chairman of the biggest office REIT in this country, Mort Zuckerman of Boston Properties. He's been a very vocal critic of the steep decline in jobs, saying this is an indication that the economy is actually in worse shape than most people think. We saw today consumers very aware that their ability to spend is threatened here. When you are criticizing the sort of forecasting here, when people look at the rise in unemployment and it not necessarily being a forward-looking indicator, you say it is actually not only the best indicator, but it's actually not necessarily reflecting the steep crisis in confidence that you think the American consumer is experiencing right now.
Well, I think the unemployment numbers, the 9.5%, is only a partial story. As I tried to describe, you have both unemployment and underemployment. The combination of the two is now 16.8%. But that leaves out 1,400,000 people who've been looking for a job for the last year, but somehow or other, for various reasons, family stress, exhaustion, have given up looking for a job. That doesn't include 1 million people who were working in residential construction who, because they're illegal aliens, they did not show up on the employment rolls, and they don't show up on the unemployment rolls. I could go on and on. My only point is that the unemployment numbers are worse than they look. The economy is worse than it looks. It shows up when you have higher unemployment, you have higher savings rates, you have lower consumption, you have lower confidence on the part of the consumers. You're looking at a much weaker economy than what people are talking about. The government is addressing not the real economy, in my judgment, but confidence in the economy. And at some point, the real economy is going to determine confidence in the economy. And what we're seeing is people are really losing confidence as consumers in where the economy is taking them.
And what does that mean for you? Because, you know, apart from your views here, you actually take an active role at Boston Properties as chairman. You're also in the newspaper business. So running those two businesses right now, what does that mean for you in the office suite? I mean, are you continuing to look at potential headcount cuts?
Well, I think if just to take the two businesses separately for a second, I mean, the commercial office building market is a variable market. We're at the top end of the market. We're in markets where there are supply constraints. Now, we're also affected by a declining rents, but given the quality of the buildings we have, whenever rents go down, tenants want to move into those buildings. So we're doing fairly well relative to the marketplace. But for those buildings that have big financings that are coming due, or big leases that are coming due, those buildings are going to be in trouble. And a lot of commercial buildings particularly did a lot of financing. I mean, hundreds and hundreds of billions of dollars were done in the last 5 years. I think 80% of all CMBS financing was done, and it's all coming due in the next year or two. And there's no way that that money can be rolled over. There's no way that it can be rolled over at the same cost. So those buildings are going to be in trouble without question. But what is even more of concern to me, and this is where we are being affected in the publishing business, particularly in the newspaper, print publishing business, but it's also true in television. Advertising is down, and advertising is a reflection of the confidence that you're right. Advertising is a reflection of the confidence that business has that their advertising will be effective. And what, of course, they're seeing is it's not nearly as effective as once used to be because the economy is so weak. So that, to me, is another indication of a weaker economy.
The expectation is for a 10 to 15% contraction, drop-off in advertising and ad spending this year. Do you think it's actually going to be worse than that?
Yes.
More than a 15% drop?
I think it will.
Where are we now in that?
I don't know the exact numbers today. All I'm saying is that it's not something that's stable. It is continuing to decline. It's already declined, and it's continuing to decline. In the print world in particular, in the last, at an annualized rate, it's much higher than 15%. In the local television stations, it's much higher than 15%. So I just don't see, and by the way, the areas of growth, like on the internet, is much slower than people expected. So we're in a situation, and it makes perfect sense from the corporate point of view. Why advertise when it's not going to be nearly as effective as you would like it to be?
Well, what I want to see is a breakdown in consumer confidence in the office suite versus that on the street, on Main Street. We're going to stick with us because we have to head to break. Okay. We're going to talk more about commercial real estate with Mort Zuckerman. Welcome back to Bloomberg. We're here with Boston Properties Chairman Mort Zuckerman talking about commercial real estate, also talking about the consumer confidence numbers that were just out this morning. Mort raising a red flag here, saying confidence actually is going to continue to contract because he thinks unemployment not only is going to climb, but that perhaps the situation with the joblessness or the lack of job growth is going to be self-perpetuating here.
Yes, it certainly.
That when the economy comes back, are you going to be hiring as many people?
It's not, no. You've seen a lot of profit margin in the American business world widen. That is, their margins are getting better, even though their top-line revenue growth is not very good. Same
because
thing,
they're cutting SG&A.
They're cutting SG&A, and so what is good for the individual company, because they cut a lot of, they're slashing costs and they're cutting people, right? They're cutting jobs, is bad for the economy at large. It's the savings paradox. What is good for the individual family when they save is bad for the economy because it means they don't spend. Now, Michael Boskin had a column in the Wall Street Journal just a couple of days ago in which he pointed out that with all of the various tax breaks and income breaks and that the personal incomes went up by $320 billion in the first 6 months of the year. But the consumer spending was only $1 billion. Think of that. Think of what that means. It means people are saving, they're not spending. And the reason why they aren't spending is because employment is going up, unemployment is going up, and confidence is going down, and everybody, home values are going down.
And so commercial property prices down 7.6% in the month of May. You at Boston Properties, you recently, on your conference call, talking about the commercial real estate market, company lowered forecasts going forward.
Well, we didn't. We're actually doing a little bit better than our forecast. But having said that, there's no doubt but that rents are going down. The advantage that we have, if I may say so, is that we are in supply-constrained markets, so there's not a lot of new supply coming on. Number two, we are at the upper end of that market. We have the highest quality buildings in virtually every market. And what happens under those circumstances is when those, and we also have a very long lease term. So
you've said you're going to look to buy assets right now.
Yes, that's exactly right. There will be an opportunity, in my judgment, to buy assets at a price that is a good long-term investment, which is the way we approach the real estate business. But what happens when you have the highest quality real estate and rents go down, a lot of people who want to move into the best buildings now feel, well, I can afford to move into it, and so we rarely have any kinds of serious vacancy, which is exactly what we're experiencing now. We have a lot of tenants interested in the space we have.
Would you be hiring in real estate right now, or in your newspaper business? No, you're not going to be hiring. You're not going to be.
Quite the opposite. In the publishing business,
we're letting
people go. We're letting people go. We have no choice but to do that. The top line, which is the revenue line, is going down. We have to cut costs.
Thank you so much. They're taking us to break right now. Mort